did you see that consumer confidence is down? Bloomberg was talking about this.
These are bad numbers. It was expected that we would see it drop to 94, but seeing it drop to 92.9, that is the lowest since the middle of the pandemic.
Yeah, don't drop to 92.3. Oh, you should always drop to 92.3. See what I did there, Joe?
What did you do there?
It's just a little play on our frequency.
I did see that. It was well done.
Thank you.
But what
back in 2021.
Wow.
2020,
Let's get a chart of that. That is sick.
So that is.
You gotta love geeks that are like, let's get a chart of that. That is sick.
We're at 92 point something.
92.9, the bull today's hot country hits.
Let's get a chart of that. That is sick.
Let's chart it.
That's sick, man. That is sick. Consumer confidence is at a 12-year low because Americans are worried about what's going to happen with the economy. And now we've got a 25% tariff that's going in place on vehicles that are manufactured outside of the United States, including some American car brands that do their assembly or they import some of the parts on that.
Mm-hmm.
So this is going to have an effect on the average auto price. Right? And what happens if the new car prices go up? People turn to the used car market, which means that there's more demand for the used car market, and you can expect the used car market prices to go up as well.
Yeah. Now, the Trump administration, though, they look at these numbers and they say, much ado about nothing here, similar to what the Biden administration was doing a couple of years ago. The
nothing to see here.
Current White House plays this all down. They say Americans are going about their business. They're still spending. They're still buying. They're going on about their daily lives. I didn't believe this when the Biden administration was saying it, and I don't believe it now when the Trump administration is saying it, because I'll list off some businesses here. Walmart, Target, Macy's, Best Buy, Abercrombie & Fitch, Dollar General, all being very cautious about their expectations for 2025. So you've got the Walmarts, which serve the masses, along with the Targets. You've got Abercrombie & Fitch. They're a little more upscale, but predominantly, I mean, Dollar General, that is the heart of America. I would say middle income, lower income spenders. And if you see Dollar General, and increasingly, we're seeing some of the wealthy visit those stores. Because they're saying, I can't afford to go to the more bougie grocery options.
Yeah. Keep this in mind, too. When it comes to the potential for a recession, Walmart and Dollar General, your discount stores, they tend to actually do well. Whereas other companies start to lose value during recessions, those companies maintain or even grow slightly during recessions. We saw this play out in 2009. We saw this in 2011. Those places, because you're trying to save a buck, you're worried about where your next meal might come from, so you want to make sure you're not frivolously spending, which means you're putting off that computer purchase. You're not buying that new TV.
Exactly.
If the fridge is loud, then we just deal with a loud fridge. We don't replace it, right? But
not until it breaks.
Right. So where do you go? You go to Walmart, where you have perceived value.
Or you buy the scratch and dent. You get whatever you can just to get
good.
by.
I love the scratch and dent stuff.
And that's the issue here, too, is it's not that people aren't still buying stuff. I mean, yes, people are buying groceries. They need to eat. To your point, with cars.
Yeah.
They're just not buying the newest, best car. They might be getting a used car, or they might be getting a hand-me-down from a friend, or an individualized sale. But there is definitely an effect going on here with the economy that I do not think it's much ado about nothing with these numbers. I think the Biden administration was trying to get people to look the other way, and I think the Trump administration, same thing.
Yeah, for clarity, the Biden administration was trying to tell you that inflation wasn't that bad.
Yep.
The economy was actually doing okay. In fact, the economy was doing too well, which is why the inflation was growing as rapidly as it was. And I mean, obviously, at the pandemic, we had the supply chain issues. But then after that, the economy was booming. And that's in large part because, in some part, I should say, because we had the relief, the COVID relief funds. Mm-hmm. So we all had extra money and we were spending that money. So all of a sudden, prices started going up because demand was up. And they said, no, the inflation isn't that bad. Now we're hearing, well, the economy is doing really well. We could see inflation come right down real fast. Mm-hmm. I mean, I could see inflation or even stagflation set in if all of a sudden we are feeling like things are going down the tubes. And again, consumer sentiment has people feeling like this is bad. Consumer sentiment dropping 12 points in this last month. Now, one thing that's interesting here, if we can point this out, Joe, is that if you are nervous about the economy, are you going to go spend money?
No.
No.
You're going to spend on your essentials. You're not going to spend discretionary funds.
That's what I was looking for. Yeah.
Yeah.
So if the economy is not necessarily bad, but you're nervous about it, and so you withhold your discretionary funds, if you do that, times 335 million people in the United States,
Exactly.
all of a sudden you do end up causing a recession based on the way that you're feeling that a recession could be coming. And so it becomes a self-fulfilling prophecy. I'm worried about the potential for a recession. I'm not going to spend money.
Yeah.
You don't spend money, and that means that a recession hits, which is why a Deutsche Market survey has shown that the probability of a recession is approaching 50% right now. So we've seen this grow pretty significantly, and I'm nervous again about what we're seeing with the volatility of this tariff hokey pokey. The tariffs in, the tariffs out, the tariffs in, and shake them all about.
Yeah.
And with that, drives down consumer sentiment. Stock market doesn't like volatility, which means what is one of the biggest indicators that we all see on a daily basis. You hear Becky Lynn talk about it all day. She gives her news, and at the end of the news, she says, and the market today, the Dow is up, the NASDAQ is down, the S&P is flat. I mean, this is what every single day, it's right in front of our faces.
Yeah, Dow's slightly in the red today, down about 130 points.
And I wonder what it's going to do tomorrow. If we were to look at the futures right now, I think you would see that they are dropping. That could recover overnight. We might see people that are optimistic by the morning.
Yeah, to me, I don't see good indicators right now for the economy. Home and car sales down. I saw some stats today. Over a third of people dipping into their emergency funds, emergency savings. 37% of Americans tapping their emergency savings. 80% say that they're doing it to make unplanned emergency expenses or pay monthly bills or day-to-day expenses, things like that. How much are people pulling out? 25% plus say that they're pulling out between $1,000 and $2,500.
Yeah, and they don't want to be pulling out, but they've got to resort to Plan B now.
Yeah. Mm-hmm. And the issue is it's not just, hey, I'm pulling this out to go on a unplanned vacation to Disneyland or to Italy. They're pulling out those funds to pay for groceries.
Yeah.
Thanks for watching the Chris and Joe Show. Click to see more from Chris and Joe and tap the button in the middle to subscribe to KTAR News.